So we'll move on to the next presentation, where we will have Sigridur Torfatodir and Arnaud Gillin, both from Innpact. They're going to present a session on democratizing access to impact finance.
So, good afternoon, everyone. Thank you for being here. We will try not to be too long. I think the mic is working because I hear already the sound of the glasses over there. So it's good to have a break. So my name is Arnaud. As you just said, I'm the co-founder of Innpact. We're a small company based here in Luxembourg, specialized in impact investing. I'm here with my colleague Sigridur, what we say, Siga. And we want to discuss with you today about a challenge that we have in impact investing. So impact investing is, as you know, is this part of the sustainable finance family that goes a bit further into creating the impact. So impact finance, the nature, the real definition is to say that it's the finance that has the intention to generate a positive social and environmental impact, wants to measure it, wants to report on it, in addition to creating some financial report. And the issue that we have in our industry is that although it speaks to every one of us, it's only restricted to a few set of investors. So what are the solutions that are already existing to give access to impact finance solution to small investors, you and me, people in the street, because they want to place their money where their heart is? Do you compare to the various restrictions that we have? So that's what we will try to discuss today, giving you a bit of background about the scale of the problem, and then what are the solutions that are existing. And then basically, it's almost like a call for action here in Luxembourg, because as you see, most of the examples that we will explain are done in France, in the UK, in Holland, but we still need to do a lot here in Luxembourg. So it works. Good. Just 30 seconds about Innpact. So we created the company 15 years ago with a mission to help the development of the impact finance sector. So we first work with the development finance institutions, European Investment Bank, the German Development Bank, World Bank, etc., to help them to create their first microfinance fund at the time, so like 15 years ago. So we help them to structure their funds from a legal point of view, financial point of view, governance, operational, and impact strategy point of view, and then we help them to launch it. And then now today, on top of these role as, let's say, structuring expert to help design and set up an impact fund, we also help in the running of these funds. So we have an AIFM license here in Luxembourg so that we can lend to investment managers that are not fully equipped boutiques. And so they come to us and we co-manage funds with them. So currently we've set up around 30 funds over the last 15 years, started with microfinance, then being brought to renewable energy, sustainable agriculture, forestry, education. We're currently creating a carbon fund, biodiversity funds, etc. So just focusing on impact investing. We are a team of around 50 people, fully dedicated to this mission. We're a mission-driven company. We're first B Corp here in Luxembourg. And so what we have done over the last 15 years is try to look at what are the challenges in our sector in impact finance, from the tiny sector it was to the only tiny sector that it is today. Yeah? So what are the barriers that we are all facing? It's difficult to set up a fund, so we help in the creation of funds. It's difficult to get a license to actually act as a fund manager, so we are basically lending our license to smaller actors. And there are many other barriers. And one of the barriers, I said today, is the access. It's really currently still restricted to institutional investors, impact investing, the products, the type of risk, the understanding of how to invest in. For the moment, only institutional investors are getting into that. And just to give you a glimpse about the scale of why we would like to have these smaller investors is, globally, if it works, now it's stuck. There you go. Private wealth is around $300 trillion worldwide. So it could be 350 or whatever, but that's the scale, $300 trillion. Out of which we have about a third that comes from institutional investors. So pension funds, insurance companies, sovereign wealth funds. Then you have another third, that is around a third, that comes from private bank clients, ultra high net worth individuals, high net worth individuals. And the last third is about retail investors. And you take these $300 trillion, and then you compare it to the size of this little dot, which is just $1 trillion, which is impact investing. So we say that every year we need to invest trillions to reach the SDGs, and we're just at a scale where it's really tiny. So we have just 1 trillion. So we need to make sure that we can access the other 300 trillions. So we have solution for the moment for a third of these 300 trillions, but we don't have solution for the other 2/3. And the other 2/3 really want to get into that. So when we say we need more money, we don't have money, one of the issues that we have is that we don't have access to all the type of money that is interested by impact investing. So why is it a problem? Why is it a problem to get access for these smaller investors? First thing is the knowledge. They don't know. They don't know how to invest first. They don't understand what a private equity fund, what private debt fund is, how the products that seem very complicated for them. So they are excluded by the simple fact that they don't understand what they're investing in. Corporate investors, they have teams of lawyers, risk managers, hundreds of people, of investment managers. That's their job to invest. So they're really professional into that. But people like you and me, well, we are in the financial sector for most of us here today, but for most people, just reading a prospectus is very difficult. So you need to make it easy for people to understand how to invest into these kind of impact finance product. And as I said, usually we're talking about private equity funds, private debt funds, so this is not made for the public. So we need to make it easier to understand what the product is about. Then we need to train people to understand how do I go from my investment to the actual impact that I want to generate, whether on the forest, on biodiversity, on CO2 capture, education, all these very concrete impacts that these people want to participate to through their own money. So what's the link between my money I invest into this fund to the impact that is generated? So we need to be able to explain that. Then we need to be able to guide them to say, okay, which impact do you want to support? Which sector are you interested in? What are the characteristics of and the needs in these various sectors? So you need to guide them into their selection. The issue is that who they face usually is their bank client relationship manager. And the main issue is that the same client relationship manager doesn't know either. So that's the issue. We design products, we say, well, we have a perfect solution. Now we bring it to a private bank and want them to distribute it, but the CRMs of the bank are not able to explain it to the clients. So we're missing this distribution channel. So intermediary people that are able to explain to the people, this is how the technical product functions, and this is how you can actually generate the impact, and I guide you how to select the best product to generate the impact that you want. So knowledge is an issue. So first, people don't know, and they don't even know what are the products that are existing. There is no database, worldwide database of all the impact finance products. So they're kind of a bit lost. So that's why they need these intermediaries who could guide them to identify and to understand what kind of products they should invest in. Then the size is a problem. Obviously, we're talking about private equity funds, private debt funds, structured products that are structured for mostly institutional investors. So usually the minimum ticket is around 1 million, 5 million. So obviously for people in the street, they don't even have 1 million to invest in. And even if they had 1 million to invest in, they will not put this into one single instrument. So this is really a problem. We need to go down from the 1 million to the 1,000. And why is it 1 million, 5 million, the minimum? It's because of the transaction cost. For the moment, to onboard an investor, it takes time. There is all the KYC, so know your customer, anti-money laundering process, operational processes. we've heard about AI, we talk about blockchain, etc., but it's still not yet something that is commonly first accepted or implemented. So it's still relatively costly to handle this smaller transaction. That's why the barrier is so high. And if it's not just due to the transaction cost, it's due to regulation. The regulation sets the bar for illiquid investments to 125,000. So we are very far also from the 1,000. So the size here is a problem. Private investors want to be able to invest 1,000, 5,000, and even very wealthy people, they say, I have 5 million to invest in impact investing out of my 100 million. They don't want to put 1 million out of the 5 million into one product. They want diversification. So we should be able to have smaller tickets and being able to handle them. And then the last point is liquidity. Pension funds are able to take very long-term views on their investment. They can say, well, I'm fine. I'm investing into your 10, 15-year private equity fund. I have no exit option, but that's okay. I'm geared to actually take this longer risk. This is not possible for most, even smaller institutional investors to be stuck for 10 or 15 years. And so even more obviously for retail investors. They want to, it's not that they want to pick and choose. It's not that they want to trade and say, I was investing in education, now I changed my mind. Microfinance is more important for me, or forestry is more important. No, that's not what they want. But they want to have at least the possibility, if something happens in their life, to exit the investment, take these few thousands of euro and give it to their child or something else. So they have to have some liquidity option. And on the contrary, impact investing by nature is illiquid. When you invest into reforestation, you cannot say after 2 years, I made a mistake, I want my money back. Okay, well, easy, let's chop the trees. And so I can give you back the few thousand. No, it takes time to generate the impact. And so by nature, impact investing is illiquid. So you see there are constraints on both sides to say that if we don't innovate, if we don't bring new solutions, we will always have the 2/3 of the money of the private wealth excluded from the development of impact finance. So, as I said, our mission in a way as Impact, and thereby the name of Impact, so innovation for impact finance, is to try to find solution, and find solution by cooperating and partnering with actors. And so what I want to do now, I said I would be short, but I'm not short, is to give you a hint of the various solutions that are already existing in the market. Team for the Planet is an initiative in France. They created a cooperative. So you can participate to the cooperative as small as $100 or euro and be part of an impact finance movement. And this cooperative is investing into climate tech, climate industrial project at a scale of 1 million, 1.5 million. So this is very easy. It's online. In a few minutes, a few clicks, you can invest. The issue with this, it is a not-for-profit cooperative. So they clearly say it on their website. They say, we will reinvest time and time and time again the money that you've injected. If we exit some investment, we will reuse this money to invest into another one. So, well, yes, you participate to impact finance movement strategy, but you don't get your money back. But they had quite a success. They raised 25 million from 114,000 shareholders in less than, and they say like around 3 years. So it's quite a massive success through social network, and they've clearly shown that there are some solutions, they need financing, and you can participate to this movement. And even if they say you will not get your money back, they still received 25 million from more than 100,000 people. So you see the interest in the people in the street to say, I want my money to be used the right way. Again, the issue is the exit on this side. Gringot is a new French, again, system of payment where also in a 2-minute clicks, you get a debit card that you charge through Visa payment or PayPal, etc. And then you can use this debit card to pay in the shops. It's a MasterCard card, actually, and you can even have this on your phone, Apple Pay or Google Pay. And then they would use the 0.2% that usually these systems get from the shop. So the shop actually pays a portion of the money that they receive to the debit card system, and they will use the 0.2% to actually finance impact projects. Similar kind of projects than the Team for the Planet. So renewable energy system, energy efficiency system, reforestation projects, etc. So it's very tiny, 0.2%, but they've managed to have in less than a year 15,000 customers. And they've already financed, I think, the equivalent of 50,000 of project, but they are just starting, and it's accelerating. Again, social network, and again, speed, and then small transaction. But again, here it's more like donation. Their next step, because I discussed with the founder, they want to be the Triodos. For those who know Triodos, this Dutch sustainable bank, they want to be the Triodos of France and of Europe, but through everything through apps and digital. Their next service will be a saving account, and then they will propose investment fund. So here really they took the angle to say, okay, we want to target retail investors. Two other examples, it has been there for many years already, the crowdfunding platforms. Crowdfunding platforms were started with donation mainly, and it started with microfinance actually, and then it spread around the world for many different uses. Here, there are these are two platforms that are providing here not a donation opportunity, but a real investment to retail investors as low as 100,000. So l'État is again a French headquarter crowdfunding platform, but they are active in many countries already in Europe, and they managed to raise the equivalent of 130 million euro over the last few years to finance impact projects. So you can just log in and you can finance, and then you take actually shares, you're a shareholder into the companies that are being financed, or you provide debt through convertible notes. Here, comparatively to the two previous solutions, you pick and choose the project that you want to finance, and then you become a shareholder, or you become a debt provider to these entities. So we're really talking about impact finance. Then you get a return. The issue here for the moment is that this solution for the projects are relatively costly. They charge around 7 to 8% to the various projects, but still, it's a massive success again. Their next view is obviously now, thanks to the new European regulation around crowdfunding, is to be available everywhere in Europe. And we are already working with them to create joint parallel vehicle to their crowdfunding platform, so that even institutional investors could co-finance together with a crowd, some projects. So the projects are financed more quickly, thanks to the institutional money and the retail money, and they can do even more impact, so that people could even participate to more projects. So this is accelerating. New regulation in Europe, you will see more crowdfunding platform teaming up with other institutional investors. Trine is a Swedish-based platform we work with as well. They're just focusing on solar energy. They've raised 40 million over the last few years, only from people in Sweden. Just Sweden, 40 million. So now they will also go Europe. The LTIF. I mean, I don't know if you already talked about the LTIF yesterday, but obviously this is the next type of fund that we're all waiting for to get on board private investors. We see a lot of new, well-established impact investment firms that are establishing their LTIF. Here, Mirova, the French ESG and impact asset manager, have launched an LTIF investing into companies, so private equity in Europe, on these various streams, so agro-technology, circular economy, clean energy, and smart cities. And it's quite massive success, especially in France, and they are distributing everywhere. The issue is still that this product needs to be understood by the private banker, by the advisor to the retail investors, so that they are able to access to it. So distribution is something important. Carbon Equity, Dutch-based platform. Here they said, indeed, climate tech is the future, and there are a lot of people that don't have 5 million, 1 million. They want to invest into these climate tech VC and PE firms. So let's simply offer them a feeder structure. We regroup 100 of these investors, so we reach the minimum 5 million. So we create a feeder for them to jointly invest into these private equity deals. So what they do, in addition to the feeder, is that they do the whole assessment of which climate tech fund to pick. And so they, in a way, also combine the knowledge of advising which fund to select, in addition to the technical solution of the feeder. They've raised 50 million, they're going to the next scale. We're talking to them to even create an LTIF jointly to combine with their current feeder. And they've just raised 5 million euro as a company to continue their own mission. This is also a mission-driven company. Not only outside, but here in Luxembourg, we also have actors who go and say, okay, let's try to connect directly the retail investors, the small investors, to the sustainable finance product, money flow. You may have heard of George Bock's initiative. They just received a license from the CSSF to start operating. So basically, through the app, you will be able to directly invest into these funds. Plus, you will have all information to understand what kind of fund you want to invest in and the kind of report. So it's not only outside. Here, we see actors that are coming, that are tackling this issue about how do we give access to small investors to sustainable finance products. And hopefully, we'll see money flow coming also for the impact funds very quickly. Here, we have two solutions that we would like to present to you that we are designing and co-designing with other actors at Innpact. First one is tackling liquidity. So as I said, it's difficult for investors to go into these illiquid impact funds because they cannot exit. So we are creating a new company that's called October. And October will provide to investors into illiquid impact funds a liquidity guarantee, so that if they want to exit after 4 or 5 years, even if the fund cannot redeem them, cannot repay them, then we will be there to provide them the liquidity. So we give them a liquidity, they pay an annual premium, the fund reports to our entity, and we are backed by public funders who would give us the balance sheet to be able to issue this liquidity. How does it work? It works that if the private investor needs to exit from this impact fund, they call the guarantees, and basically what they are able to do with the guarantee is that we've agreed to buy their shares at a pre-agreed price, pre-agreed mechanism, whereby they know that in year 4, they say, I want to exit, we are here to buy their shares. And then we provide them with an upfront payment, usually 50% of the latest value of the fund. And we try to find a buyer in a secondary market. So October will have a whole set of partnership with potential buyers of impact funds that are ready to invest into funds that are in their year 4 or 5. It's interesting for these investors because instead of investing into a fund that doesn't have yet a portfolio, now they will see already an impact portfolio, 4, 5, 10 investments, and they can assess the risk. And so they are interested to invest into these secondary market transaction. So we then get the cash from the investors, and then the difference between the upfront payment, between the 50% of latest NAV that I mentioned before, and the price that we receive from these investors. So let's say we sold it at 90% of the latest NAV. The difference, the 40%, we sell it back to the investors. So we are creating this as a new institution with the European Commission, with Development Finance Bank, to actually provide liquidity into the market. And we're working with a whole set of impact fund managers who are really waiting for our solution to exist because they will be able to tackle the other 2/3 that we mentioned, because now they will have a liquid product. Another product that I will let my colleague Siga explain is a securitization vehicle.
Next time I'll start, so I'll get a bit of time. Yeah, so the second example that we wanted to show to you, or the second initiative that we have been working on together with partners is Imagine. So Imagine is an impact bond issuance platform that is set up as a Luxembourg securitization vehicle. where we aim to solve some of the problems that we have listened to today by creating a bridge between impact projects and investors. We do that by turning impact projects that sometimes are complex, sometimes not, into at least an instrument that is well known by the market, so bonds. We also aim to minimize the complexity by using a standard language, so using a language of international agencies and standards, such as the ICMA, or working with institutions that are at the forefront in each sector. We've been creating programs where we standardize the language used to explain and to monitor and manage the impact. And the way that we work with this is that our clients are originators, so fund managers, project developers, asset owners. We work with them on securitize, so we set up a compartment within Imagine. We securitize their impact assets, and we issue bonds that are sold to investors to finance the project. So this slide was mostly to complete the full color range, so in our presentation. So here, what we want to show here is that it's a multi-compartment vehicle, and the compartment, which is the benefits of the Luxembourg securitization law, is that the compartments are fully segregated by law, so there's no spillover between the different compartments that are set up for our clients. And as you can see here, we issue, or we can issue green bonds, social bonds, or sustainable bonds through use of proceeds framework that we have already set up at the level of Imagine to facilitate the issuance of these bonds under the ICMA principles. In addition to that, we also have, because it is an impact bond issuance platform, we also have our own ESG and impact management policy that is applicable to all bonds that is issued under the or within the platform. So as I said, we work with originators that are fund managers, investment advisors, impact advisors, project developers or asset owners, and their role is really to bring the assets, so the securitized assets, and also the investors, while we provide a platform that is an easy to market, one-stop shop in a way, you can say, but our role is really to provide a good ESG framework for the investment. We provide standard legal documentation for the bond issuance, and we bring all the different service providers to the table, help with the listing process if that is the intention with the bond. Now, we wanted to give you a few examples on how Imagine can be used. So this first example here is using Imagine to bring co-investors, small co-investors into an investment that one main investor or core investor is facilitating. Either this could be a fund, for example, that is investing in an impact project, but the ticket size is too large for the fund, so they need to bring in more investors. Then this can be done through securitization, so securitizing the underlying asset and then easily distributing to the investors using a bond. Another example would be to take, and this is maybe the most relevant to the topic of the presentation now, is to take an impact asset, which could be, for example, a note in an impact fund, and to securitize that to create bonds that could be eligible for investment by a UCITS fund that is then readily accessible by retail investors. And here, of course, we will be creating a transferable impact security that could be listed on the Luxembourg Green Exchange. Another example, and this is, here we are maybe more looking at high net individuals or family offices. It's a way of kind of creating a flexible vehicle or off-balance vehicle to have or to manage an impact investment strategy for investors. And here what we call this managed accounts, because here you don't have to have a predefined asset to be securitized, but you can start off with the compartments within Imagine to kind of gradually build up your investment portfolio. Then the last example is using Imagine to finance a carbon project. So here the originator would be a project developer issuing bonds to finance the carbon project, which would then create carbon certificates that can be sold to a third party to finance again then the repayment and interest on the bond. This is, again, I mean, we mentioned here carbon projects, but it's a typical three-party social bond setup. So that's it. We are perfectly on time.
Yeah, so we can take a few questions. One question, all right. Just before the question, I mean, the interest of this afternoon was also to launch a call for partnership. We are here to find solution, as you said, for the issue that we see that, I mean, we need to democratize the access to impact finance. So if your institution is interested to work on developing solutions in collaboration, we're here to discuss it. So happy to take any question.
Yes, sure, Albin.
Hi, thank you for the presentation. I have one comment and one question. So comment on it's like IDD and MiFID, you know, about sustainability preferences for investors. So that is in the public space, but have you thought about how that can sort of increase the knowledge?
Keep the mic.
Okay, so I'm wondering, have you thought about whether MiFID and IDD with sustainability preferences for investors could increase knowledge around specifically this type of topic? And secondly, my question is, have you thought about tokenization around private equity in order to make it available for a larger audience or target, if you want? Thank you.
Yeah, thank you. So indeed, the MiFID questionnaire is the starting point for any private bank manager to start discussing it. And we've tested it with one bank. The issue, as I said, is that, and as part of what is done today, done by LuxLike, is that usually the client relationship manager is not sufficiently equipped to guide on the questionnaire itself. And maybe the next round of the questionnaire will go a bit further again. But I think that's why I was trying to explain a few solutions that are not only around the technical solution to get access, like tokenization is one of them, but also knowledge. Knowledge is an issue. So this questionnaire for the bank, we work together with the bank to make it a bit larger and a bit more detailed in the impact questions. But we faced the issue that the person who was sitting down together with the client was not herself or himself equipped to get into the question. But fully agree, this is the mandatory opportunity to actually start the discussion and try to guide. Then tokenization, yes, definitely. We're in discussion also to plug our platform, Imagine, with tokenization system. You may have heard of Blockholm here in Luxembourg with Tokenai, which is using a securitization platform and the power of tokenization to facilitate the KYC process and onboard small investors. So that's the combination, that was my point. That's the combination of all these elements, knowledge, distribution, getting the cost of operation transaction down, that will make it affordable. That's why I'm saying it's just a partnership that could work with it. Thank you for the question.
Thanks. Thank you, Sigridur. Thank you, Arnaud. Thank you very much for this presentation. Again, I will echo your call for a partnership, and I would like to invite you to enjoy a break, stretch your legs after these 4 sessions for the next one that will take place at 4:30 with Allen and Overy. Thank you very much.